Let me paint a simple picture for you. Imagine paying on a mortgage long enough that your kids are grown and their kids are starting to grow too. That's basically the idea behind a 50-year mortgage. It's a real thing being talked about again, especially here in Sacramento. And people are already asking if it's the answer to affordability or just another layer of trouble down the road. I've got some honest thoughts on this, and there are a few pros, but there are also some big concerns we need to talk through. So let's break this down the right way. Now, keep in mind, I'm not a lender and I don't sell loan products. I'm just a realtor coming to you with an unbiased opinion, hoping that this gives you the education that you need. Hey, I'm Josh Lasquette, realtor, husband, data-free, and someone who cares deeply about helping families like yours stay grounded in truth while building something lasting for today and the future. Let's start with a foundation so we're all on the same page. A 50-year mortgage is exactly what it sounds like. A home loan stretched out across 5 decades. You're not imagining it. That's a long time. But the idea behind it is simple. If you take the same amount of money and spread the repayment over a longer period, your monthly payment drops. And that lower monthly number is what grabs people's attention, especially in markets like Sacramento, where home prices have steadily climbed faster than the incomes. And that's really where this product tries to step in. It's built to make the repayment feel more manageable today, even if it means paying significantly more over the life of the loan. You don't just stretch out the timeline, you also stretch out the cost. Interest gets extended across a much longer period. Equity builds at a much slower pace, and because of that, your financial momentum, that forward movement that homeowners rely on, takes longer to show up. Now, a 50-year loan isn't inherently bad, but it's not a magic fix either. It's a tool created to help people qualify in expensive markets, not a tool designed to maximize long-term wealth. Here are the core realities to understand. Lower monthly payment. Yes, this can offer immediate breathing room. Much higher long-term interest cost. You trade short-term comfort for long-term expense. Slowest equity growth of any mortgage product. You'll own less of your home for longer. Primarily used to help buyers qualify in high-cost areas. It's a response to affordability challenges, not a solution to them. Once we understand what the product actually is, we can make much clearer decisions about whether it helps you or quietly holds you back. Now, before we get into the concerns, let's be fair about the upside, because there are situations where a 50-year mortgage creates real, immediate relief for certain buyers. These aren't imaginary scenarios. These are the realities I see when I sit at kitchen tables with Sacramento families trying to make the numbers work. Number one, lower monthly payment. The biggest draw is the monthly payment. And for some people, that one line item determines everything. If you're renting at $2,900 a month and a 50-year loan drops your payment to something closer to $2,600, I understand why that catches your attention. It's not because the loan is perfect. It's because the math feels like it finally gives you a doorway into homeownership instead of keeping you on the outside looking in. Housing is expensive in Sacramento, and there's no point in pretending that that isn't true. Number two, it helps buyers enter the market when they otherwise couldn't. With prices rising, incomes not keeping pace, and interest rates creating extra pressure, many people feel boxed out. They save, they plan, they do everything right, and the goalposts keep moving. A longer loan term can create just enough room for someone to qualify who otherwise might need years more to save or wait for better conditions. And for some people, owning a home now, even with a long loan term, means stability, predictability, and a sense of forward motion that renting doesn't always provide. Number three, it creates breathing room in the budget. This is a real factor, especially for families. A slightly lower mortgage payment can free up money for things like daycare, rising grocery prices, car maintenance, sports fees, your medical expenses, unexpected life curveballs. Life doesn't hit pause just because you bought a home. Sometimes a little breathing room is the difference between surviving and actually living with some margin. Number 4, it gives first-time homebuyers psychological relief. This isn't talked about enough. Homeownership can feel overwhelming, especially in a competitive market. Knowing the payment fits a little more comfortably can remove some of the stress and fear that often holds people back from taking that first step. But, and it's a big but, these benefits come with strings attached, and that's the tension here. The pros are real, the relief is real, but the long-term consequences are real too. A 50-year loan might help you today, but it may quietly slow down your wealth building tomorrow. So let's take an honest look at the other side of the coin. Now, I'll be straightforward about this. Even though a 50-year mortgage can create short-term relief, I'm not a fan of this strategy for most people, and there are solid reasons why. Number 1, you pay significantly more over time. One of the biggest concerns is the long-term cost. Yes, your monthly payment might drop today, but the total amount you pay back grows dramatically. When you stretch repayment over 50 years, the interest compounds for decades longer. And when you step back and look at the whole picture, not just the monthly payment, the final price tag is often massively higher. For many families, that difference isn't just a number on paper, it's money that could have gone towards savings, education, investments, retirement, or simply creating more financial margin. Short-term comfort can come at the expense of long-term freedom. Number 2, the equity builds at the slowest pace possible. This one doesn't hit people immediately, but it matters a lot. With a traditional loan, the early years already favor interest over principal. When you stretch that loan to 50 years, that imbalance becomes extreme. For the first several years, sometimes the first decade, you're barely chipping away at the amount you owe. That means the home is building very little wealth for you, especially if the market cools or flattens out. Equity is what allows you to move up, refinance, or leverage your home. And this type of loan slows that progress to a crawl. Number 3, it can keep you stuck longer than you want. Life changes, job change, families grow, priorities shift. But if you haven't built enough equity and you're still near what you owe, it can be tough to sell, tough to refinance, and tough to make the next move. A longer loan increases the risk of being locked into a home longer than you ever intended. And I never want to see a client feel trapped because of the structure of their mortgage. And number 4, it creates a false sense of affordability. One of the biggest dangers is psychological. A 50-year loan can make something feel affordable, but feeling affordable and being financially sound are not the same thing. When the payment is lowered, it's easy to think, okay, this works, I can handle this. But long-term cost, slower equity, and less flexibility can limit what you can do in the future. You might find that the savings you experienced in year 1 cost you opportunities in year 10. Number 5, it doesn't solve the real issue. The truth is, the 50-year mortgage is a response to an affordability problem, not a solution to it. It doesn't fix the rising home prices or the stagnating wages. It doesn't fix high interest rates or low inventory or the cost of living pressures. It simply stretches the payment so people can qualify today. That's a Band-Aid, not a cure. And personally, I'd rather help families find strategies that strengthen their long-term position instead of ones that just soften the monthly blow today. In short, the pros are real, but so are the consequences. A 50-year mortgage isn't automatically bad, but it's definitely not neutral. It shifts the burden from the present to the future. And that's a trade-off everyone needs to fully understand before they make a decision. Now look, I'm not here to judge. I'm here to serve and guide with honesty. Now, a 50-year loan might help with someone who needs temporary breathing room, or a buyer planning to refinance within a few years. But if this is the case, is a 50-year really the best option? And this is where having a really good lender in your corner comes into play. A 50-year might also help investors who care about monthly cash flow more than the long-term cost. But for most families that I work with, especially first-time buyers, there are usually better strategies, such as negotiating seller credits, or buying a home with cosmetic issues, looking just outside the hottest zip codes, or using a 3-2-1 buy down. Here's the part of the conversation that matters most to me, the heart behind all of this. Buying a home isn't just a transaction. It's not a race to get the lowest payment or the biggest house. It's not about winning or losing based on the loan term that you choose. It's about building something steady, something rooted, something that supports the life you're working toward. Your home should feel like a foundation, not a weight you're dragging behind you. A shorter loan doesn't make you more disciplined. A longer loan doesn't make you irresponsible. What actually matters is alignment. Does this choice support your long-term stability? Does it move you closer to the life that you're building for your family? Does it give you peace, not just today, but in the years ahead? Those are the questions that deserve your attention. So if you're here in Sacramento and you're thinking about buying or selling, or if you just want a second opinion on which loan option actually supports your long-term goals, I'm here to help you walk through it with honesty, strategy, and a calm, level head. Take a moment to download my free home readiness checklist, join my VIP email list, or set up a discovery call. Those links are all right below, and they're designed to help make this process easier, clearer, and more empowering for you. And remember, the single smile is infectious. It can spread joy and cover a mile. We'll see you next time.